Hello my fellow investors and welcome back to another earnings report analysis. Today guys, let's actually take a look at the company Discover. They just had earnings today, and yesterday, well technically today, I did put out a video showing you guys the company's fundamentals and my target share prices for this company. And if you guys saw it, well, it seemed to be like a screaming buy today. Now, let's actually take a look at the earnings report, guys, because, well, I want to see if my opinion may have changed based off of this, right? Things may have changed. Who knows what could have happened with the earnings report? So with that said, let's delve into this earnings report right now. Now, before we actually get started with this earnings report, guys, let me just all remind y'all that, of course, none of this is financial advice. Every investment is the present value of all future cash flow, as well as this earnings report, guys. I'm going to leave the link in the description below so you guys can read it. It is very, very lengthy, so I'm not going to go over all of it. You know, if you guys want to read it, go ahead and please read it on your own time if you have the time, but I'm just going to go over a couple points that I found somewhat interesting. So starting off, guys, we got Discover Financial Services reports third quarter of 2022 net income of $1 billion or $3.54 per diluted share, which is actually kind of good. Now, compared to what we'll see in just one second, but right here we got everything itemized and compared to last year, as well as the year-over-year change. Because the total loans end up period in billions of dollars, it was $104.9 billion. Well, let's actually bring it up to essentially $105 billion in 2022. And, well, take a look at this, guys. In 2021, third quarter, obviously, $89.5 billion. That is an increase of 17% year over year. So from Q3 of 2021 to Q3 of 2022, pretty good increase, guys, of 17%. Total revenue of interest expenses, this is in millions. This came out to be, guys, $3.5 billion in 2022. And in 2021, it was $2.8 billion, like $2.78 billion. There's another increase of, look at this, 25%, which is massive. So in just 1 year, they raised their revenue 25%. Now, if you guys remember what I said my revenues for in my discounted free cash flow, you guys are saying that like, wow, that's really different than, this is significantly higher than what you put. We'll take a look at that in just 1 second when we reevaluate, but essentially, guys, 25% in their revenue. Total net charge off rate in 2022, it is now 1.71%. 2021, it was 1.46, which was an increase of 25 basis points. Net income actually came in at a loss of 8%, $1 billion in 2022, and in 2021, it was essentially $1.1 billion, a decrease of 8%. So they actually have been essentially doing pretty good when it comes to their total loans, their revenue, all of that was good. Their net income came in a little bit bad, 8% negative. And when it came to their diluted EPS, it actually came out, guys, to be exactly the same, $3.54 for both years. So we got here, guys, a summary of what we just went over. Discover Financial Services today reported net income of $1 billion or $3.54 per diluted share for the third quarter of 2022, as compared to a net income of $1.1 billion or $3.54 per diluted share for the third quarter of 2021. Now we have a quote here from the CEO. We got, our outstanding third quarter results were characterized by the robust loan growth and net interest margin and strong credit metrics, said Roger Hochschild. I'm not sure if that's how you say his last name, but regardless, he continued to say these results reflect our continued disciplined approach to credit management, the strength of our integrated digital bank and payments models, and our solid execution, all of which position us well for a range of future economic environments. Now, there is something else that I noticed while I was reading this, and this was actually down here. We got the share repurchases. The company repurchased approximately 2.1 million shares of common stock for $212 million through July 20th, 2022, prior to the temporary suspension in our share repurchase program. Yes, because they had to temporarily stop that because of the whole COVID thing, right, that was happening. I think it was government orchestrated that financial businesses could not buy back shares. Shares of common stock outstanding declined by 0.7% from the prior quarter. So yeah, guys, in one quarter, they bought back around 0.7% of shares, which is really good, actually. That's actually really solid. In just one quarter, they bought back almost 1%, which is, yeah, as I said, really solid. And now the next thing that I really want to point out, guys, is also this dividend declaration. The board of directors declared a quarterly cash dividend of 60 cents per share of common stock payable on December 8th to holders of record at the close of business on November 23rd. So right there, guys, they're essentially declaring that, you know, they are putting a cash dividend of 60 cents per share. So all of that's all good and dandy. And that's pretty much all I want to talk about when it came to this third quarter earnings, when it came to Discover. Now, looking at what happened today when it came to Discover for their stock price, you can see that throughout the day they actually went up by around like 1.25%. However, after market they came down almost 2%. So they essentially erased all their gains this morning or throughout the trading day, and then some post market. So right now their current share price is $94 on the dot. But yeah, I mean, everything's still staying pretty much the same as it was. So with that said, let's actually jump now, guys, into my discounted free cash flow and make some further assumptions, because let's face it, we might want to change some things here. Obviously, I showed you guys all of their fundamentals on today's video, so please check that out. I'm not going to go through them again. I'm just showing you guys exactly what their fundamentals were. And well, let's actually come down here and change some of these assumptions that we made. Now, for the revenue growth of 3, 4, and 5%, I'm actually going to keep this roughly the same. Yes, I know that in 1 year they did 25% of revenue. Okay, great. Awesome. Will that continue to happen in the next upcoming years? 4 or 5 years? Probably not, right? Probably not. So I'm going to keep it, guys, at 3, 4, and 5%. I'm going to keep that the same. Now, the one thing that I will maybe lower a little bit is these shares buyback, because, well, I don't know if they'll be buying back shares. So I'm going to say that they won't be buying back shares at this same rate. So let's actually change the low assumption now to 5%. And let's actually switch this one now to 8%. Actually, no, let's bring it to 7%. And let us bring this one up 2% from 7. So let's bring this one up to 9% for the highest assumption. Now, you can see right here, guys, now the target share prices, they haven't really changed much though, but they're still fairly high, $277 to $310 essentially, not adjusting for debt from lowest to high assumption, $288 to $321 for adjusting for debt. So still fairly high, and margins of safety of 15% lowest assumption, $245 to the highest assumption for 5% margin of safety is now $305. So even then, guys, based off of their fundamentals, their profit metrics, their low amount of shares outstanding. Again, this is why these numbers are coming up this high, is because they do not have that many shares outstanding. In fact, let me just show all of you guys exactly what I mean by that. So if you come over here, guys, they only have 275.3 million shares outstanding. That's really tiny. Apple, Microsoft, they have it in the billions. That's why if they decide to increase shares, then by that logic, the market cap will then be divided by a much bigger shares outstanding. Therefore, these target share prices will come down. But 275 million shares, and I'm saying that they'll buy back even more in the future. Yeah, you divide by a smaller number in the future, guess what? Your share price will go up. That's essentially, guys, what I'm getting for these target share prices. All in all, I still think, in my personal opinion, that Discover is still a pretty solid company overall. Remember, the grade that I gave it was an 88%. The biggest issues was that liabilities when it comes to their cash flow, give it a 50%, as well as just their cash flow in general could be a lot better when it comes to just continuously increasing, but they were still fairly good when it came to it. But anyways, guys, my assumption when it comes to this still roughly remains the same, that they are pretty solid when it comes to their fundamentals and at the current price of $95.86, which, by the way, again, today it did fall to $94. Yeah, guys, it might be a pretty decent price to buy it at today. Anyways, that pretty much does it for this earnings report analysis. Hopefully you guys like it. Of course, link in the description below for the earnings report if you guys want to read it. So with that said, peace out, and I will see you all in the next stock analysis video as well as earnings report video.